Hello, everybody. Welcome to Wednesday. The S&P 500 was down 0.02% today, essentially unchanged. Also unchanged are signals. I'll make a note that actually our stock market signals have been green since early May throughout this entire run up here. One brief blip of yellow on the fast signal during the rebalancing that happened at the end of the quarter. We ignored that because of the fact that the rebalancing was happening. And then once that was done, the market took off again. So I think it's really important to kind of watch what happens with the stock market. Today during the Federal Reserve meeting that happened, Chairman Powell talked about how the staff was no longer seeing a recession imminent on the horizon, which wasn't true at the beginning of this year. They thought there'd be one happening here by the second half of the year. Now, the chairman himself has always been of the opinion that they could do these rate increases without having a recession, that we could have a soft landing, mainly because the job market was so strong. And so he's actually been, more correct than most of these economists. They have over 400 economists on their staff, which is kind of amazing. So I do think it's important to watch what happens with the stock market. And that's why, our signals can be somewhat important as far as that go. They're based on the motion of the market and different parameters that we're looking at. And of course, within our, ETF universe that we look at, we follow the waves that are coming and what's moving. And of course, technology was taking off in early May. We've been riding that wave all the way through. Today Google hit a 15-month high based on some good numbers. And we're seeing the economy do pretty well. We saw Visa report that the spending by consumers was up more than expected. Again, these are all things that are, happening where there's some strength in the economy, strength in the job market that really wasn't expected by a lot of Wall Street analysts and by economists and what have you too. So, the market has been climbing this wall of worry. We went up a quarter point today, which is fine. Expectations now are that we won't have any more increases for the rest of the year, although Chairman Powell today, didn't say that they wouldn't raise rates. They're not trying to put themselves in a corner basically and box themselves in. They said that they're going to be data dependent, basically just looking at the data each time. The next meeting is until September, a couple more months of numbers coming through. I would be surprised if they raise rates unless inflation just starts to really go again, which it hasn't so far. So not a bad day altogether. Really, I think it's still a good time to be in the market. A couple of good days here on Monday, Tuesday. Today was just kind of flat, absorbing this news, and we'll see what happens going forward. But looking forward to seeing you tomorrow. Thank you very much.